All right, Jason Gray, welcome to the Jason Gray Show. All right, let's talk about my favorite subject, Tesla stock, Elon Musk and their team over there. So let's talk about what's happened in China, and we'll talk about other subjects through this video and just sort of give you a quick overview of what I'm sort of seeing globally over the next couple of years. So as you've seen recently that the Tesla China location, they've reduced the prices of their cars in between 10 to 15%. And of course, it upset some people who purchased cars a few weeks ago, rightfully so. But Tesla China came out and said the reason why they did that is their cost of goods and their cost to build the car has gone down. And so what they're able to do is lower the price of the car. And I don't know if you remember this, but pre-COVID, you had a price of the car here, and then they kept on stair-stepping up the price of the car as costs kept on going up. They're saying they're going to hold their margins, and I think Wall Street will actually enjoy that they made this comment today that they're willing to hold margins, and they're going to hold margins with this new price point. And I think Wall Street was worried about that the margins would come down, but China made it really clear that they'll still be able to hold margins at the current level. So they've been getting their production lines down, and they've gotten efficiencies going on. Of course, costs come down based on overall volume of you purchasing stuff. So in doing so, I think China's an interesting conversation to have. And I think the other thing is that they just had Idra, who is the mega casting company. They just threw out a 9,000 ton gigapress that's going to China, where no one has any idea what this press is for. Is it for a Cybertruck? Probably not. Is it for maybe a new model of Tesla? That's where I'm sort of leaning towards. Or is it just to make some more refined perfections with the Model 3 or Model Y in China and drive those costs down with that 9,000 press ton? I don't know if you understand, but none of the other like ICE manufacturers like Ford, GM, or any of the big manufacturers, none of them do those castings. And the amount of money that Tesla's able to save if they're doing the castings is crazy. So that's number one piece. Number two, the other thing's been going on lately is people are having these conversations about these mega packs. And these mega packs are these big batteries that are utilized for utilities where they're able to give them these battery packs. And when they need power, they load into the battery packs, drain the power out of it, and it actually makes the whole, the whole system a little more secure. So if there's not enough, you don't have to get a bunch of coal going, or you don't have to get, the solar panels to kick up and running, or let's say the wind's not going. This creates a stability to the electrical grid and electrical system itself. So in doing so, there is a huge tax incentive for Tesla and these companies that buy these mega packs with this new IRA. And so in doing so, that the numbers that people are talking about online through Twitter and through YouTube, the numbers sound a little staggering. You got profit margins from people talking about 10% all the way to 60% profit margins. And we're not talking these things are really cheap. They're $2 million a piece. There's a 2% maintenance fee. There's recurring costs that always has to go in. There's some type of agreement in regards within the software about the money that is saved through the energy source. The money that's sitting there can be ginormous. And what I mean by ginormous is they're saying this could be $1 trillion wing of the Tesla industry. You talk about the car industry in 2030, another $1 trillion. So you're talking about some really huge numbers in sales that could add up over time. Now, if they're anywhere remotely close to these numbers, you got to take a look at building a car is complex. Building a mega pack, there's not much to it, right? We're talking about battery packs that look fancy in a little box compared to a car that someone has to drive down the road. Lots of moving parts on this. And the profit margins are pretty huge over here. So in doing so, if their numbers are somewhat remotely close, I think we're going to start seeing those numbers come into the earnings over the second and third quarter and fourth quarter of this year. I think we'll start a little hint of it in the fourth quarter of this last year, but I think you're going to start seeing those numbers come in. I think Tesla will release this year a couple more mega pack locations, another gigafactory, and I think that gigafactory is going to be in northern Mexico because of the trade agreement between US and Mexico. In doing so, we're going to take a look at some other things that we got going. You got the Cybertruck. Cybertruck should be the second or third quarter of 2023. That 9,000 pound press for the Cybertruck is already in Austin, Texas. And in doing so, you have a 1.5 million people backlog on that order. So let's say you get half of them. That's 750,000 of cars, 750,000 cars that can be delivered to people that are looking to purchase the Cybertruck. Then you have the semis. The semi is a unique situation because you don't just have to buy the semis, but then you do have to buy one of the mega packs or one of these charging stations for the semis because they draw so much power to charge those things up. So it's just not the cost of semis, but you have this extra money that Tesla makes on the side as well. You got the full self-driving, which hasn't hit the market all the way yet. I use it on a daily basis. It's pretty amazing. You take a look at the robo-taxis. I think that's a unique opportunity. We're talking 4, 5, 6 years out on that. And then you got the Tesla robot, and who knows when that'll hit the market. And we'll see what they do in a whole year's timeline. You do have earnings numbers here at the end of January, and then you have a Innovation Day March 1st for Tesla, and they're going to be giving out a lot of information during that timeline. When they give out that information, hopefully they introduce that $30,000 to $25,000 vehicle, and that maybe is that next vehicle that they need. I think they need more product lines. Like they have the X, the S, the Y, the 3. They have these 4, but I think they need to be more products. Of course, they'll have the semi, which common people won't buy. The Cybertruck's going to be a huge one, and I think they just need a low budget car. Then they're pretty well rounded. That point in time, you got to take a look at Tesla and how they've been able to scale, and how Elon is a master of just manufacturing, right? That's a manufacturing and a software company like no other. And you take a look at other companies and how they can't scale, and these guys know how to scale, which is crazy. That China location in Shanghai is just absolutely they doubled. The amount of time it took them to build that factory versus Austin was half the time. And so you take a look at that. There's going to be some huge expansion going on there. And it sounds like in Texas today is what I read. There was a $734 million expansion project for the Tesla Texas factory. That's a pretty big chunk of money. If they were worried about their numbers, or they were worried about being able to sell enough cars or doing whatever, they would not be investing $750,000 into expanding the Texas location. So food for thought. Let's see what the stock does. Stock, I think today is around $119 a share. Not great. Of course, we felt that decline over the last 6 months, but I think that thing's coming back. If you have any questions, concerns, or comments, please leave them below. Talk to you soon. Thank you very much. Bye-bye.